Hello traders, Imre here, and in this video I'll be breaking down how I can trade so accurately from zone to zone in equity futures like the Nasdaq or NQ. So in NQ, I posted my analysis of the market before the session got underway. And this is what I shared on Twitter, and my subscribers who I was live trading with, we had an opportunity to go even deeper than just a static image. Of course, we were looking at things price bar by price bar. Now here on the screenshot, I want to draw your attention to the 4 shaded areas that I've drawn in here. Okay, now I'm going to delete the screenshot off of the TradingView chart, and you can see how price hit 1, 2, 3, and very nearly 4 zones to the downside before I had an even bigger call to make. Now you can see in this tweet I wrote, got so close to the last zone, we've now reclaimed all the key VWAPs, looking for a push beyond 2277 now. And as you can see, price did exactly that. We pushed to 2277 and even a little bit beyond. So how is it possible that I was able to identify these zones which worked with such precision and accuracy? Is it an accident? Of course, it's not an accident. There is a method to the madness. I'm going to walk you through a little bit how all of this works. So the first thing I want to do is drop my key market structure identifiers onto the price chart. So for me, that comes down to 2 simple tools. The first is the FRVP, also known as the fixed range volume profile. And the second tool in my arsenal is the VWAP, the volume weighted average price, which is a moving average. Now there are 2 types of VWAPs I use. I use the session VWAP, which shows me the average volume weighted price for the session that we're trading, and then an anchored VWAP, which I can drop from important swing lows or swing highs. So the blue moving average on the chart is the session VWAP, and then I dropped an anchored VWAP from the overnight swing high, and I dropped another VWAP from yesterday's low. Okay, so yesterday's low and from the overnight high. And then I drew the fixed range volume profile from the bottom of this range to the top of the range, and I got these funny looking bars on the left hand side. Now what these bars represent are pockets of liquidity in the market. And you can see that these little shaded areas that I've drawn in on the chart, well, they correspond with the highest liquidity pockets from the FRVP tool. All right, so it's no coincidence that those shaded areas on the chart match up with the largest liquidity pockets in the FRVP tool. That was intentionally done. Those are my key zones, my key levels for the day. These zones can act as magnets. Now, what we notice about this range is that it was a huge range to the upside. Well, what happens after the market makes a big run? The market likes to stop and take a breather. So when the market is stopping to take a breather, we want to be able to identify how far the market is going to go before it can catch its breath and then resume its larger with trend direction. So that's exactly what we did. And as you can see, the market traded through all those zones quite beautifully. And then I waited for the market. I told my subscribers live that for the bullish scenario, I'm looking for the market to reclaim, basically break back above the session VWAP and the anchored VWAP from the overnight highs. That's exactly what happened. As that was happening, that was my trigger to start going into the market to look for long positions that would then see us push higher for about 100 points or so. The end result was picture perfect. All right, now just to put that 100-point rally to the upside in context, well, one Nasdaq point is worth $20 if we're trading if we're trading mini contracts, right? So that 100-point move could have been worth $2,000. And if you're trading just one micro contract, it's still worth something that would still be worth $200. So what I love about trading futures is that you can trade the full-size minis where those are big boy contracts. You're going to be swinging around hundreds, if not thousands of dollars day to day, or you can trade the micros where you can swing around tens of dollars to hundreds of dollars. So you can adjust your position sizing up or down depending on the size of your account and your risk tolerance. All right, so trading futures can definitely be risky. it can definitely be dangerous. And most traders who trade futures get burnt, and they get burnt very quickly. What separates us is that we approach the market with a plan. We have a rock solid plan that's been honed over many, many years. I've been trading professionally for over a decade now, and honing those skills over that time has led to the formulation of my trading plan, where I identify these key zones using advanced liquidity analysis, and then we simply look for trade entries using very basic entry triggers. Everyone thinks finding the entry trigger is the hard part. It's not. Finding an entry is pretty easy. What's far more difficult is identifying the larger trend that the market is currently in. All right, folks, thanks for watching. Hope you enjoyed this video. If you have any questions, let me know. Happy to chat with you, and I'll see you guys in the next one. Bye for now.